Now we're going to look at some LEAPS debit spreads. So LEAPS options are long-term options with expirations 6 months to 2 years out. And so LEAPS options have very rich option premiums and offer more profit potential for debit spreads than monthly options. So now we're going to look at some actual examples of ETF debit spread trades we implemented using LEAPS options. So the first one's going to be TQQQ, which is a symbol for the leveraged NASDAQ 100 ETF. TQQQ had a high RS and retraced to the middle Keltner channel, setting up a buy opportunity. So leveraged ETFs carry more risk than non-leveraged ETFs, but in our experience, these rich premiums really that were provided by leveraged ETFs really outweigh the extra risk. In our brokerage confirmation below, you can see that we purchased 20 contracts of the TQQQ January 40 calls at $2,762 and sold to open 20 TQQQ 65 calls at $966. This created an option debit spread that you can see below. The TQQQ was trading at 71.58 when this trade was initiated, and we bought the 40 call and sold the 65 call, making this an in-the-money spread. Selling an in-the-money call generates more premium income, and this gives us more downside protection and a higher probability that the trade will be profitable. As you can see below using our calculator, if the ETF is flat or up at option expiration, we're going to see a 39.2% return. And if the ETF is down 10% at option expiration, we're still going to see a 36% return. Just going over that one more time, if TQQQ is flat or up at expiration, we're going to see $704 in profit and 39.2% return. And if it's down 10% at expiration, we're still going to see $646 in profit and 36% return. So whenever you can profit with a flat or down ETF price, you have a much higher probability of success compared to a directional trade. If you purchase an at-the-money or out-of-the-money call and the underlying ETF is flat at option expiration, you'll realize a 100% loss of the premium, which is why typically we do the in-the-money options. And so this is all because you can't afford many 100% losses. That can devastate your trading account. So let's look at another example of a LEAPS debit spread trade that we implemented. So we're going to look at FAS, which is the symbol for the leveraged financial ETF. And FAS had a high RS or relative strength and retraced the middle Keltner channel, setting up a buy opportunity. As you can see below, our brokerage confirmation shows that we purchased 10 contracts of the FAS January 50 calls at $4,191 and sold to open 10 FAS 90 calls at $1,848. And this created an option debit spread that you can see below.